Is this surge in hiring then all down to the surge in gold prices?
Yeah, partly. I mean, it's been an unprecedented year in gold and all of the other precious metals, really. And, well, I've been speaking to traders and they've been telling me they've been seeing unprecedented demand from clients, like new clients have never really dealt with before, including large corporations and multiple family offices. And he said just the level of demand, well, one of the traders I spoke with the other day said it's just far from normal. But on the other hand, what the trading houses and hedge funds are really looking to exploit, I think, in the current market is the fact that we've seen huge price dislocations on several occasions this year between key trading hubs, which opens up very lucrative arbitrage opportunities. Obviously, beginning of the year, traders were very worried that precious metals would be hit with US tariffs. Some of those fears are still in the market for silver, platinum, and palladium. But basically, what we're seeing is huge arbitrage opportunities open up. And that's why all of these big physical trading houses and the hedge funds want to come in and exploit those opportunities.
So, how easy or difficult is it then to hire gold traders?
I mean, I guess historically, it's the market's been really dominated by a small handful of banks. Probably the two most well-known ones are JP Morgan and HSBC. I think in previous years, I've been talking to traders who've been in the market a long time, and they've kind of expressed sort of sentiments along the lines of banks have sort of stepped away from the market or underinvested in their team. So effectively, what we're looking at today is a lot of these banks have been operating with quite lean teams, and that's left us with not very deep pool of talent. Now that prices have soared this year, as you rightly pointed out at the beginning, new participants want to take opportunities to break into the sector, but there aren't that many people to draw upon. So to give you a sense of how much the backdrop really has changed, my colleague Jack Ryan wrote in a story earlier this month, an average of nearly $600 billion worth of spot gold has been traded each week in London in recent months. That's more than a threefold increase since 2021. The other point I would just make is, what the physical trading houses and hedge funds really want are people who understand the macro forces that, really steer what's happening in precious metals prices, but also just the practicalities of moving the metal around, because that's really where probably the biggest opportunity is, like exploiting those arbitrage windows.
So, for those people who are already in this area and skilled, are they rubbing their hands with glee? What does it mean in terms of the sort of incentives that they can attract in this area?
Yeah, that's a great question. A lot of the traders I've spoken to have been saying, they're being hit up on a weekly or, monthly basis even from other participants in the market who are keen to poach them. So I guess, the world's their oyster. They've got a lot of opportunities. I guess the most obvious incentive here is, bonuses. Trading houses and hedge funds are more willing to pay more. One of my colleagues spoke with a commodities hedge headhunter, and he mentioned that basically physical trading houses can get bonuses that are 2 to 3 times higher than banks. So you're seeing a huge amount of turnover at all sorts of levels, and yeah, I guess traders can move around if they don't feel like they're being properly incentivized for compensation or internal
Okay.
politics, etc.